Hey guys, if you've been in the market to purchase an investment property over the last year, you may have noticed the rates on them increase dramatically. Well, I'm here to tell you this is going to change. Stick around and I'll tell you why. Hey everyone, thanks for tuning in. Let's talk about what happened on pricing on second homes and investment properties during COVID. Now, during COVID, the Federal Housing Financing Agency, aka FHFA, try to say that 5 times fast, and the US Treasury announced they were limiting Fannie Mae and Freddie Mac to 7% cap on loan purchases for second homes and investment properties. This basically meant that lending companies that sold these types of loans to Fannie Mae and Freddie Mac were subject to heavy restrictions if their volume exceeded 7%. So how did the 7% loan cap on Fannie and Freddie loan affect originators? Well, it forced lenders to look at how many second homes and investment properties they had originated and throttle down the amount of loans that were doing in that space. The most significant change was made directly by Fannie and Freddie when they increased the pricing on those loans and made it more expensive, much more expensive in most cases, to purchase second homes and investment properties. And this was really done in an effort to curb the amount of loans being originated in that space. Now, being a lender that works with a large percentage of buyers looking for primary residences, I didn't view this as an entirely bad thing for my first-time home buyers, since it meant less competition in a market that was already seeing historical competition amongst home buyers, all going after the same properties because inventory was so tight. But being in Miami means I also work with a large percentage of clients that are looking to purchase second homes, and they were negatively impacted by these changes. So what are the new changes being implemented? The FHFA and the US Treasury released an announcement last week suspending the 7% cap. This also means that pricing, which affects the way lenders price rates on these loans, will be eliminated, making the interest rates for these products lower across the board for all loans. This means the overall pricing on second homes and investment properties will be 50 and 100 basis points lower respectively. Now, to be clear, this doesn't mean rates on these properties will drop 50 and 100 basis points, but pricing does affect rates, and you can expect to see rates drop with all lenders effective today. So what kind of rate improvement will you see, or what could you expect? Now, bear in mind, this is very lender specific and client specific, and because every single client situation is unique, it would be impossible to give a blanket answer without knowing the facts. But as an example, a client with a 740 FICO score putting 20% down would see about 0.25% and 0.5% on a second home and investment property respectively. So that's a rate decrease of 25 basis points and 50 basis points respectively. On a $400,000 loan for a second home, this would equal roughly $53 saved on a monthly mortgage payment and $13,000 saved on mortgage interest over a 15-year period. For the same loan amount on an investment property, that would mean $119 saved on monthly mortgage payments and $28,000 saved on mortgage interest over a 15-year period. And those savings amounts would only get better the longer you analyze those periods. So if you were on the fence about looking to buy a second home or investment property, right now might be the best time to purchase one when comparing these changes. If you ever have any questions about this or anything lender related, please don't hesitate to reach out to me. I look forward to speaking to you.